I got news for you. Cleaning up your credit report to get your credit scores increased does not guarantee you mortgage approval from a mortgage lender. Did you know that? I want you guys to be prepared with some information and hear this valuable information that a lot of people who are going to attend our home buying seminar today are going to get an opportunity to listen to. A lot of people come into this game of cleaning up their credit reports, whether it be from a credit repair company, maybe it's a realtor, whoever it is. We come as consumers thinking that if we get some items off our credit report and our credit scores do get increased, that automatically is going to pave the way to get a mortgage approval, and that's not the case at all. Okay, and I'm hoping that if you are one of these people that have entered this programs and you've paid some money for somebody to service you, I'm hoping that things do work out for you. But however, you need to know the truth. The truth is this, is that there's a lot of items on your credit report, first of all, that can or cannot be deleted. Okay, and so it's one thing to get your credit scores increased. It's another thing to actually go into the details of your credit report and find out and have an understanding of what mortgage guidelines are and what the end result of your credit report is going to be. So let me kind of give you a few examples. You could have a collection item, an item that you've been eyeing on, that you're just hoping that it gets deleted, right? And let's say that you have all three credit bureaus reporting this collection item. You got Equifax, Experian, and TransUnion reporting this collection item, and you know that this $10,000 collection item is something that can potentially stop you from getting a mortgage approval from a bank, even if you have the credit scores. So let's say you get the results that you wanted, and let's say TransUnion decides to delete it off your credit report. Well, guess what? It's still on your credit report. It's just not being reported by TransUnion. It's being reported by Equifax and Experian. So when the mortgage companies pull your credit report, they're going to pull from all three bureaus, and that thing is still going to pop up on your credit report. Now, the way the mortgage lenders look at it is they'll say, hey, you got to pay this thing off, or number two, we're going to use 5% of the balance of this collection item and look at it as a monthly liability, and they're going to include this into your debts when determining how much house you can buy. Now, if you think about it, $10,000 times 5% is $500 a month. Every $50 is about $10,000 of purchasing power. So that can really eat away from how much house you can buy. Okay. Number two, let me give you a second example. When you dispute collections, you're putting them into a dispute status. Okay. And if you don't successfully get them removed by all three credit bureaus, guess what? On your credit report, it's going to say account in dispute. Guess what? The mortgage lender is going to say, hey, we see that you have the credit scores, but according to our mortgage guidelines, if you have a balance, an item on your report that's derogatory, a collection item, and it's over $1,000 or more, and it's non-medical, we're going to ask you to remove that dispute from that collection, from that credit report, from whichever bureau is reporting it. Okay, and guess what happens sometimes? Okay, and I say sometimes because it's not guaranteed that this could happen, but here's what you need to be prepared for, basically, is that when you remove that dispute label, that account shows its true colors in the algorithm of your credit scores. And what happens is that your credit scores all of a sudden just boop, go back down. Okay. And now I said sometimes because you can remove some dispute and it may not do anything at all. Okay. So those are the two things that I want you guys to prepare for. Think about before you spend money on a credit repair company or someone who's promising you to clean their credit report. You have to be very well prepared and educated before you go into it. We talk to a lot of people. Some people come in there very, conscious about who's going to help them. Some people just kind of, hey, you do what you got to do and let me know what happens type of deal. Be very well prepared. It's a large investment. And if you're not taking the time to be thorough, be prepared, and make sure that you're interviewing the right person to help you out, then you're not really taking the time to be serious about your house and not just acquiring a house, but actually taking care of it and holding on to it so that you either can make it a good, sound financial investment to sell at some time in the future, or whatever the case may be. Be thorough. Take your time. The average sales price of a house in Tampa is $175,000. That means you're going to be borrowing $175,000 or slightly less than that if you're putting a down payment amount. Okay, so come join us if you want to learn more. A lot of people come to our seminars and they learn a lot about the credit part of it and how it all works. It's a free home buying seminar. It starts at 1 p.m. We're going to have the Tampa crew there as well, and everyone's going to be participating and engaging with each other. We're also going to have free food there at 12 p.m. So Taylor Morrison, New Home Programs, we're cold sponsoring it today, and we're going to come out there and give you some good information. Check out the link, RSVP there, pass it on. If you can make it today after church or whatever you're doing today, we promise you it's going to be about an hour long. If you can only make it to the end of it, hey, just swing on in, and we'll be more than happy to take care of you and answer any questions that you may have. Okay, take care. Have a good Sunday, Tampa. Bye-bye.